Hey everyone, welcome back. Please like and subscribe to my channel so you'll see future updates when I have them out. So today I'd like to talk a little bit about Smith & Wesson, which got on everyone's radar when a super investor called Norbert Lou of Punchcard Capital posted his 13 Fs, which are periodic filings that some large hedge funds have to post. And people noticed that he had invested in Smith & Wesson, and there's been a lot of people posting videos about this, and some of them are okay, and some of them miss the point. Like they just look at the numbers that you get on Yahoo Finance or some other thing, and then they pick some growth rate out of the air, and then they give you a expected value. And I thought it was kind of interesting that when he started buying this, I think like $18 a share, people were posting these videos and coming out with numbers. And, now it's $15 and they were posting videos about what it's worth, and $10 and they're posting videos about what it's worth. And, they just use the same assumptions about growth and stuff like that, 5%, 6%, 8%, whether the stock is at 20 or the stock is at 10. And if you're just looking at the numbers, you're going to make some errors. And I noticed that a lot of people didn't bother to even read the 10K, the annual report, or listen to the conference calls. And so they made some very basic mistakes, like just not understanding how the business works and what advantage Sturm Ruger has, Smith & Wesson has over another publicly traded company called Sturm Ruger, or against some of the other competitors like Sig Sauer or Glock or the other ones that are not publicly traded. So I'd like to talk a little bit about this and about Norbert Lou, and then we can go from there. So first of all, let me share my screen, and then we'll. So for those of you who aren't familiar, Norbert Lou is a value investor, and he used to post on a site called Value Investors Club. And some people post on that site who are very good investors. And posting on that site, he got the attention of a Joel Greenblatt, who is a famous value investor. And when he ran a hedge fund, Joel Greenblatt averaged 50% a year before fees. And if you were an investor in his fund, you averaged 40% a year after fees. So 40% a year is an incredible record. And through these postings on this message board or website called Value Investors Club, some of the ideas that he posted were very well written and did really well. Some of them were multi-baggers, like NVR went up many times the original investment, and another in the company called Quilmes, which sorry, not Quilmes. Quilmes is the beer that it produces. It's a Latin American beer producer, and that went up several times also. And Greenblatt liked the write-up so much that when he taught his investing class at Columbia, which is the same class that Warren Buffett took when he was a young person, taught by Ben Graham, and for several years it was taught by Joel Greenblatt. He would use these write-ups as an example of how to think about a stock, and break it down very simply, and identify what levers move the company and what advantage it has. And he would just use these companies that this person had written up as examples for other students on how to think about investing and how to think about a stock. And actually Greenblatt seeded some money to Norbert Lou to start his hedge fund, and the same way that he seeded Michael Burry of the Big Short fame to start his fund, Joel Greenblatt seeded Norbert Lou money. And Norbert Lou is well known for having very few positions, very concentrated. So he calls his fund Punchcard Capital, which comes from a speech that Warren Buffett gave, a very famous speech to some students, where he said, you would do very well in life if somebody gave you a punch card and with 20 punches on it, and you can only use those 20 punches for the rest of your life for investing. So when you thought about investing in a company and you knew that you had to use up one of your 20 punches and you only get that many in your entire life, that you would become very wealthy because, if you were to use up that punch, you would do an incredible amount of research and just be really sure before you made the investment and just wait for the perfect one. So in that vein, he called it Punchcard Capital, and very few positions. I think currently there's 3 in the fund now, and one of them is Berkshire Hathaway, but he had invested in a railroad company that was taken over by Berkshire, and in exchange he got the stock, and just didn't have any other better thing to do with it, so he left it in Berkshire. And the 2 other companies he had, one is Winnebago, which makes RVs, and they bought a boat company. And then recently he bought Smith & Wesson, and so that got it on the radar of certain value investors and fans and people who like to track the 13 Fs of these large investors, because if this guy very rarely buys a stock and it's very concentrated his portfolio, and he's decided to look at Smith & Wesson, then maybe I should have a look too. And just by comparison, Sturm Ruger is a big competitor, worth about twice as much, and they're very similar in terms of PE and the dividend and earnings and stuff like that. But without looking at the numbers, you should understand about Smith & Wesson, the company. So Smith & Wesson was bought by another company, and it's been around for over 100 years. I believe 1860 was when it started, and they were based in Springfield, Massachusetts, and that's where they made their guns. And they were bought out by another company whose name I can't recall. And then at some point in the early 2000s, they had a very bad run with gun enthusiasts. So at the time when the NRA was very powerful, and they were very against the government doing anything with guns and gun brands and things like that, Smith & Wesson had cooperated with the Clinton administration and said that they would work on things like smart guns, so that it would prevent people who didn't own the gun from having access to the gun, and technologies like that, and also try to get their distributors from selling guns to people that they shouldn't sell them to, which doesn't sound that unreasonable in the grand scheme of things. Like, hey, you're working on a safety for the gun, and you don't want your gun to end up in the hands of criminals. But apparently this was too much for the NRA, and they encouraged everyone to boycott Smith & Wesson. And then the company did really poorly for a while. And this company, which I believe the parent had bought for 110 or 115 million, they ended up selling it off. And the person who bought it was a person who had been at Smith & Wesson. He left because he didn't believe in the direction that the CEO was taking it. And then he bought back the company for $12 million. And for $12 million, he bought it back. And then he took the company public again and decided to do some really smart moves with the company. So one of the things they noticed was that the company had really good name recognition. And so when they would do surveys with people and say, like, what's a brand of gun that you know? And for non-gun owners, they would always say Smith & Wesson. Other people who are into guns, they might know Sig Sauer or Glock or Remington or whatever, but the name Smith & Wesson would always come up. And they would ask people, can you name a good brand of ammunition? Can you name a good brand of rifle? And they would say Smith & Wesson, Smith & Wesson. And at the time, Smith & Wesson didn't make rifles and they didn't make ammunition. And so the CEO said, hey, this is a really good opportunity for us to use our name recognition and move into these other areas. Because at the time, Smith & Wesson only made pistols and revolvers. So revolvers, have the little cartridge that spins and you put the bullet in, and pistols are the ones that, you clock like that. Smith & Wesson at the time was only making pistols and revolvers. They were not making rifles. They were not making ammunition. They were not making anything else but they noticed that there's this great brand recognition, and if we can get into these other areas, there might be a lot of money to be made there. And so they bought a company called Thompson, which made rifles. And Thompson was famous for not only rifles, but they sort of invented this category of musket loaders. So, if you saw, like during the Revolutionary War, and people would use these black powder muskets, and, lit by, like, for some reason that had to come back, and that was largely due to this company, Thompson. And Smith and Wesson bought the company for their expertise in making rifles, and they continued to sell Thompson rifles, not only the black powder ones, but their other rifles, and then started selling similar rifles using the expertise acquired from Thompson under the Smith and Wesson brand. And they also, it was a two-way street. They helped Thompson a lot because Thompson was sort of this, niche boutique, I don't want to say artisanal, but they didn't make a lot of rifles, and they were high quality, but Smith and Wesson sort of helped bring some discipline into it by refining their processes and measuring which workers make which parts, and how fast they make them and how many they can make per day, and then rewarding people based on their productivity instead of just you come in today, make how many you can, and you come in and make how many you can, and we'll just pay you all the same. They started instituting metrics and things like that you would see at any other manufacturer, the scientific management techniques. And then the company prospered under them, and they came out with a line that they call M&P for military and police. And they began trying to get military contracts and police contracts, which the police contracts had been dominated by Glock, and the military was, if any of you were in the Army, you probably had a Beretta pistol, and Beretta had the pistol contract for the Army, and Smith and Wesson was competing for this pistol contract. And I ended up buying it, and it ended up being a multi-bagger for me. The symbol was SWB at the time, and then eventually they changed for some reason to SWHC, and then at some point I sold it, and then it became American Outdoor Brands, and now it's SWBI. But I'm getting ahead of the story. So they started making these M16 look-alike rifles, and under this M&P brand, and they started making handguns that they would also target to police, and they had some success, getting these contracts for different police departments, and people were buying these M16 lookalikes, and the numbers started to go up, and they were making a lot of money, and they even started licensing their name because, as I said, it's a very well-known brand. So you may have seen your police riding a Smith and Wesson bicycle, and they even at one point had Smith and Wesson metal detectors at the airports, the x-ray machines. And they don't make bicycles and they don't make x-ray machines, but people were paying them for the right to use the name. And this is something that costs you nothing and brings in money that's 100% margin. You can't do better than that. So we're making a lot of money. The stock was really prospering. They were making a lot of pistols. And if you look at Sturm Ruger, they had been making pistols and rifles all along, and we're making a lot of money on both. And the thought was that if Smith and Wesson was only making pistols and they can start making rifles, Sturm Ruger actually makes more money in rifles than they do in pistols. And so if you can start making pistols and then get the same ratio of pistols to rifles as Sturm Ruger, then you'd make a lot of money. So the licensing was going well, and they're doing really well getting contracts with police departments, and they're competing very rigorously with Glock. And when I say the competition was rigorous, both these companies, Glock more than Smith and Wesson, had gotten in trouble actually for bribes that they would pay to police commissioners to get these contracts. So Glock, would fly people out to Georgia, where their headquarters are, And these high-level police chiefs and people with the department, they take them to strip clubs, they buy them whores, whatever they wanted, alcohol, hookers, bribes under the table, cash, and then they would get these contracts. And Smith and Wesson got tarnished a little by that as well, but there was definitely a lot more of it going on with Glock. And Glock is a very interesting company. It's privately owned. The guy who started Glock had a company that made hinges, like door hinges and handles for furniture and things like that. For curtains, they would stamp the rods. And he noticed, he's from Austria, that the Austrian government was going to award a pistol contract. And, they had companies in Germany and Czech Republic that made pistols, but, they had no Austrian company that made pistols. And he thought, well, if I start a company that makes pistols, and this is a company that can submit a bid for this government contract, as a local, I'd have a better chance of getting the government contract than these foreigners, because it's a military contract. And he had the machines, as I said, to stamp out the hinges and the curtain rods, and decided to make a gun to compete for this contract with the Austrian military. And he went to the library and he took out all the guns he could find, all the books on guns he can find, and looked at all the patents and figured out how they worked, and decided to make a gun of his own. And then he came up with the Glock, which uses a lot fewer parts than some of the other competitors, and doesn't even have a safety, at least the original didn't. And he submitted this, and it was very popular, and it won the contract. He made a lot of money from selling guns to the Austrian army, and then eventually started exporting it. And the police liked this gun, and he was competing and getting these contracts. And as I said, they were flying people out to Georgia, where their headquarters is, people in the police department who were responsible for these contracts, and taking them to strip clubs, buying them hookers, giving them money, whatever they wanted. And some of these other, if you look at the news articles, and I won't go into it, but it was pretty shady business. And Smith and Wesson apparently had gotten in trouble for this too, and some of these contracts were canceled, and definitely with Glock, people were arrested. But things got better, and on legitimate competition, Smith and Wesson was doing fine. And they were getting contracts for the pistol, and as well as the M&P, one that looks like an AR-15 to sell to these police departments. And hunters love them too. And as I said, they were licensing their brand as well, so they were making money. Smith and Wesson bicycles, Smith and Wesson X-ray equipment at the airport, and the stock was growing. And at some point, they were competing for a $800 million military contract with the U.S. Army, and they were one of the finalists. And so I held onto the stock probably longer than I should have, or I should have just bought some options, because I thought at the time it was an 800 million market cap. And if a company trades at 1 times revenue, and then, your revenue goes up another 800 million, that stock could double. But they didn't get the contract. And then the stock took a hit. And then a Republican got into office, and then the stock did worse. So generally what happens is these companies do better when there's a Democrat in the White House, because people that buy a lot of guns have this fear that the government is going to come take their guns. So when a Democrat gets in the White House and they talk about gun control, they all run out and buy more guns, thinking that the window's going to close and you won't be able to buy these. And so when a Democrat is in the White House, generally gun sales go up. And when a Republican who is more gun friendly and friendly to the industry gets into the White House, ironically, sales go down because the buying is based on fear, and the fear of the government coming, taking away your weapons. And actually, if you look at the numbers, there's a number called NICS, which is published by the FBI, and it's based on background checks. You can see month to month how many people buy guns, and it's publicly available. They print it every month, and the number just keeps going up over time. But in the 1960s or 50s, I believe, More than half of US households had a gun, and but the average number of guns, I believe, was like 2.1. And when I owned Smith and Wesson, the average number of guns per person was like 6. And last time I checked, now it's like 7 point something per person. And the number of people owning guns, the percentage of households that own guns, it's less than 35% now. So the number of people that owns guns is getting smaller, but they're buying more and more guns. And, if you watch this show called Doomsday Preppers, you'll see some of these people have, 60, 80, 200 guns, and they just can't get enough. They think the commies are coming over that hill, and, the only thing between them and annihilation is, one more gun. A lot of these guys are 400 pounds. And, if you had to guess, what's going to take them out, the fact that, they had a coronary heart attack because they're 400 pounds, or because, they were missing that one extra gun because the Russians came over the hill. I know where I bet my money, but anyway, fewer people buy more guns. That's the story. And if you see, it was like a pretty steady slope, about 6% more year over year in the gun sales. And the next number, it's pretty accurate. It's not 100% accurate because they run that check every time somebody wants to buy a gun. But, if they run the check and a flag comes up because they have a criminal conviction, the person doesn't buy a gun. If they run the check and the person buys 2 guns, there's still 1 check, or sometimes they'll run the check and the person doesn't want to buy a gun. But, it's generally a pretty accurate predictor of if you do a gun check, how many people are buying guns and the number of guns sold. And that has gone up about 6% a year for a long time. And in 2020, there was this big spike. And the big spike was due to a couple of things. One is stimulus checks, and 2, there was a lot of civil unrest that we won't go into. But, again, people thought the world is ending, I need a gun. And the shortages in ammo and things like that. When there's a shortage, just like there was a shortage of toilet paper, people don't act responsibly and say, well, I'll just wait to get it because there's a shortage. They say, like, no, I'll just buy twice as much because there's a shortage and might never get one. So, the combination of a shortage because of factories closing down and supply interruptions due to the lockdown and civil unrest, and stimulus checks, just all combined, and people were just buying way more guns in 2020 and 2021 than they had before. And the stock tanked recently because the number of guns sold had come down, something like 40% or something. But the thing is, you have this one-time spike because of the lockdown. But if you had looked at like from 2000 to 2019, that sort of upward slope of about 6%, and then you see that giant spike in 2020 and 21, and then it dropped 40%. But if you sort of graph that spike out, and just follow that trend line, the trend line this year is where it would have been, if 2020 and 2021 never happened. So it's sort of continuing that upward trend from 2019. Obviously down from 2020 and 21, but still up from 2019, and probably will continue as it has in the past, that 6% a year. So when you're thinking about how many guns they can sell, that's one of the things to look at. So anyway, along the way, besides not getting the Army contract, a couple of other things they did wrong. They got into these sporting goods like fishing and hunting and things like that. And so they were buying a lot of these brands that were outdoor brands, like brands that made knives, brands that made survival equipment and things like that. And then they rebranded themselves as American Outdoor Brands and changed their ticker symbol. And I thought that was a mistake because, and that's part of the reason I sold. Not only were they overpaying for a lot of these companies, they were buying high growth companies and they were paying a lot of money for them because they thought, we're going to pay for growth here. But you always want to be careful with a gun company or a cigarette company because there's always that threat of lawsuits. And when Dick's Sporting Goods decided to stop selling guns because somebody had purchased a shotgun in one of their stores and went on a mass shooting, at first the gun activists, turned on them, but Dick's realized if there's more shootings and somebody bought the gun from us, people are going to boycott us, and then we won't be able to sell tents, we won't be able to sell shoes, we won't be able to sell other things. So we make more money on that other stuff than we do from the guns. So they got rid of the guns, and they're doing great now. And so I thought, well, the danger with getting into these outdoor brands like knives and fishing rods and camping equipment is that if you're known for this other stuff, and then somebody shoots somebody with a Smith & Wesson gun, then people are going to boycott your other stuff, and it's going to get tainted by the brand. And there's also a danger of lawsuits because recently there was a $72 million judgment against Remington, I believe, for a mass shooting that occurred with somebody who used one of their weapons. And so as with cigarette companies, you want to see these companies pay out a lot of their money in dividends and not leave the company, not leave the money in the company where it's a target for lawsuits. So anyway, that's where we are now. And one of the things that I noticed in the past, I've seen Smith & Wesson bicycles and Smith & Wesson X-ray equipment in the airport, but I don't see that anymore. And I think they got distracted by this camping and fishing acquisitions that they bought and were overpaying for. And recently they spun that off into a separate company, good riddance as far as I'm concerned, and are now focusing on their core again. And I think part of the story is that if they do get into these other things, that they can grow the licensing stuff. So, they make guns, they make sights, and they make suppressors, but they also make handcuffs. And I think, if they either licensed or bought a brand that made an acquisition of a brand that made ammunition, that's instant name recognition. Do you want to buy this brand of ammunition that you've never heard of, or do you want to buy Smith & Wesson? Smith & Wesson is the name you trust. You're going to buy Smith & Wesson, if Smith & Wesson is making the ammo, or if they license it to somebody who's responsible who makes the ammo. And Smith & Wesson bicycles, I've seen police riding them, but when I Googled it the other day, I don't see anyone that has them. So I think they stopped making them. So again, that's something else that they can license out for people. Why not Smith & Wesson body cameras, Smith & Wesson other police equipment, tactical vests, things like that. So there was a time when the company that made Taser, Axon, almost went bankrupt. And, I think that was a missed opportunity for Smith & Wesson, because they could have bought this company and saved it from bankruptcy. And now that company, I believe it's like a $8 or $10 billion company. And, Smith & Wesson dropped the ball on that. They didn't want to be involved with tasers because it was a non-lethal thing and they were a gun company. But had they, thought ahead, the taser would have been a high growth thing. And the body cams, it turns out that company Axon now makes a lot more from the body cameras than they do from the tasers. And they missed the boat buying that company because, Smith & Wesson now is 485 million, but that's companies like, forget, like 8 or 10 billion. But, there's nothing that would prevent them from developing their own non-lethal technology like a taser, or acquiring a company that makes body cams, or acquiring a company that makes bullets, or just licensing the name out. And then if you start licensing your name out more again, that's 100% margin, and it's a lot of money coming in. And also, let's talk about the breakdown between rifles and pistols. So rifles are much more expensive than pistols and revolvers. And you'll notice that if you look at the Smith & Wesson earnings report, they sell still more pistols than they do rifles. So the numbers have come down, but off that spike. But in 2021, the number of rifles they sold were 524,000, and the number of rifles in 2022 is 363,000. So that number came down. But in 2021, they sold about 4 times as many handguns, and they sold about 5 times as many rifles in 2022. And in terms of revenue, for 2021, for rifles was 253 million 340, and for rifles, for revolvers and handguns, they don't split them out. For revolvers and handguns is 755 million. So got about 3 times as much revenue from the handguns and pistols and revolvers, the handguns, as you do from the rifle. So 3 times as many as much revenue from the rifles, but you're from the handguns. Sorry, but they're not selling 3 times as many handguns. So hold on a second here. Find this. So when I looked at the breakout for Sturm Ruger, they always sell more in terms of dollar amount of rifles than they do pistols. They don't break it out by unit and tell you this is how many pistols we sold and this is how many rifles we sold. They just tell you the amount that they sold, and generally they sold more rifles than they do pistols and revolvers, and that was straight up until 2019. Then you had that big spurt in 2020 and 2021, and with Ruger, and I'm assuming the same thing with Smith and Wesson, they started selling more pistols. So generally, the up until 2020, 21 spike, Ruger had always sold more rifles than pistols and revolvers. And the thinking is, or my thinking is, and maybe Norbert Lou thinks the same thing, is that with regard to Smith and Wesson, most of what Smith and Wesson sells is still pistols. And if they can get the ratio of rifles to pistols the same as it is with Ruger, then that's going to at least double their income. So as I said, and if you're talking about number of units, in 2022, Smith and Wesson sold 363,000 rifles and 1.5 million handguns. So it's almost 5 times as many handguns as rifles. But if you look at the income breakout for handguns, they made 624 million, and for rifles they made 189 million. So they sold 5 times as many rifles. They sold 5 times as many handguns, but the income from the handguns was only about 3 times as much. So they sold 5 times as many handguns, but the income was only 3 times as much. And why is that? It's because handguns don't sell for as much as rifles. So if you are selling the same ratio of rifles to handguns as your competitor, Sturm Ruger, you're going to be selling a lot more of the higher margin product, and then your numbers are going to go up. So I think probably what Norbert Lou sees is that even though the price, the earning sales dropped 40% year over year from 2021, that they dropped from that aberration, the spike during 2020 and 2021, and that if you draw the trend line from say 2000 to 2019, it's going up a certain percentage a year. I believe it was 6%. And if you take out 2020 and 2021 and you just continue the trend line from 2019, 2023, 2022 looks right on target, and then 2023 and 2024 should go up from that trend line. Just ignore the aberrations. It should go up from that trend line. So it should benefit not only from increased firearm sales, even though the number of people buying it is going down. They are buying more each. So as I said, when I owned it before, it was the average was 6 per person, and now it's up to 7.2 per person. So the number of households that have one is going down, but the more, they keep buying more. So that's going to continue. And as I said, they've done really well with rifles. And if they keep getting military contracts, they keep getting police contracts, and they keep growing the share of their pie with the rifles, then that's a big income generator for them, because as I said, currently they sell way more pistols than rifles. And if they can get that rifle number up, that's a lot of money for them. And in fact, it wasn't until last year, 2022, that they introduced a shotgun. So now there's one Smith & Wesson shotgun. It appears to be selling well. It's a bullpup shotgun, which means that the loading is closer to the back than the other ones. But anyway, up until this time, these numbers that for rifles didn't include a shotgun because they didn't make shotguns. So they're making shotguns. They've announced plans to sell off Thompson, which is the company that they bought to acquire the know-how to build rifles. And now that they've got that, Thompson is still a well-known brand, and they can just spin that off and sell it to somebody else and use that money to focus on the Smith & Wesson brand, instead of trying to have 2 or 3 brands that you're trying to promote. So in terms of the bull thesis, one, down 40% year over year, but if you follow the trend line, it's gone up according to that trend line, and may continue to do that. You've got a potential increase in growth in higher margin rifles, and the fact that now they are now starting to sell shotguns, that's going to help that number get to where it should be. So that's 2 positive developments for growth. And I think the third thing, as I mentioned, I haven't seen any talk about licensing recently. And when I looked up who makes Smith & Wesson bicycles, there's websites that sell bicycles specifically to police, and none of them have Smith & Wesson bicycles listed on them in stock. So they're on the website, they cost $1,000 and up. But nobody has a Smith & Wesson bike in stock. So I'm guessing that the company that they licensed this brand to is not making them anymore. So I think that if they start doing more licensing, again, with regards to bicycles, with regard to ammunition, with regard to X-ray equipment at the airport, with regard to body armor, with regard to holsters, things like that, I think those are all areas for growth that give this potential. And if management focuses on that, that's great. A couple of the videos I saw on Smith & Wesson, they identified the amount of cash on hand. The 10K said that as of, I believe, April 20th, that they had 120 million. And one of the videos I thought was very sloppy. He said, oh, they've got $120 million, they can use that for buybacks or whatever. And, obviously they didn't read the 10K because, Smith & Wesson is moving its headquarters in one of its warehouses from Springfield, Massachusetts down to Marysville, Tennessee. And they are going to pay for that. And the cost is $120 million. So if you are looking at that as an asset on the balance sheet and saying like, hey, look at this, this is great. This can go to shareholders. You didn't understand the assignment. You didn't read the 10K. That money's already spoken for. So you can't get that back. What you will get back from that, though, is they are not happy with the way they were treated in Massachusetts. And by moving their headquarters and their production facilities to a more business-friendly and gun-friendly state like Tennessee, that's going to give them some advantages. Not only more receptive legislators and things like that, but it's going to reduce their costs. So Springfield, Massachusetts isn't big enough that you can run a check on that on a website that gives you cost of living calculations. If you move from New York City to Miami, those are both big cities, and you can throw those numbers in a cost of living calculator, and it'll punch out a number. If you make $100,000 in New York City and you move to Miami, it's like making 150. But both of those cities aren't big enough for you to kick out a number like that. But the nearest city to Springfield, Massachusetts is Hartford, Connecticut. And the nearest big city to Maryville, Tennessee is Knoxville, Tennessee. And they're both about 30 minutes from each. So 30 minutes from Springfield, Mass is Hartford, Connecticut, and 30 minutes from Maryville, Tennessee is Knoxville, Tennessee. And when I looked up the cost of living on those, and it's about 23% cheaper in Maryville, Tennessee than it would be in Springfield, Massachusetts. So I think you're paying $120 million for this new facility. You're going to get a state-of-the-art facility. You're going to get better production. You're going to get more efficient production because you're concentrating a lot of things in one place. And you're also probably going to get a workforce that's going to be willing to work for about 20% cheaper than they would be willing to work for in Massachusetts in terms of salary, but also cheaper in terms of benefits because the labor laws are more favorable in Tennessee, and you wouldn't have these other extraneous taxes that you'd have to pay in Tennessee that you would in very high tax Massachusetts. So that's going to help them there. They do still have a warehouse in Massachusetts, and when they spun off American Outdoor Brands, everything was all in the same warehouse, but it actually worked out well for Smith & Wesson because now they're splitting the warehouse costs with American Outdoor Brands as a subtenant, and so that's part of the cost is being helped out there. And there are some little odds and ends there, other ways to make money. So when they acquired American Outdoor Brands, changed to American Outdoor Brands, and they were, companies that made fishing gear and hunting gear and stuff like that. They made some other acquisitions that Smith & Wesson kept. So the acquired a company that makes plastic injection molding, which they use to make the grips on the guns and other things. And, that's a potential revenue source because they can also take contracts from other people to make things for them. Since they already have this company that makes stuff for them in-house, they can do it for other people on a contract basis. And the company that makes the suppressors, that wasn't spun out, they kept it in-house, and I believe they kept the company that makes the laser sights. So anyway, a lot of different moving parts in here, and there's a lot of untapped potential. And I think long term, in terms of compounding the growth numbers, that's what Norbert Lou sees, because they're underutilizing their ability to franchise a strong brand. You've got potential to keep growing the rifle segment, which has been growing. Now they're getting into shotguns. You can keep growing that segment. They haven't had a shotgun before, and if you can get the ratio of rifles to pistols and revolvers the same as it is for their nearest competitor, which is Sturm Ruger, you're going to make a lot of money. And you've also got some avenues that Sturm Ruger doesn't have with regard to the licensing, because as I said, if you ask somebody who doesn't own a gun, can you name a gun brand? They'll name you Smith & Wesson. If you press them for another one, they might say Glock, they might say Colt or something, but that'd be like a distant second. And so in terms of potential for branding, this is an advantage that Smith & Wesson has that Sturm Ruger doesn't. The name recognition, Dirty Harry had a Smith & Wesson 357. He didn't have a Sturm Ruger. He didn't have a Sig Sauer. He didn't have a Glock. And so, that name recognition is there. And, if you are a government contractor and, you're going to buy this X-ray equipment for the airport, would you buy the Smith & Wesson or would you buy the Shimkus? If you are concerned about, more unrest and you want to go with your spouse to the gun store and buy your first gun, you've heard of Smith & Wesson. You might not have heard of Taurus or, some of the other brands that other people have, but, if your life is on the line and, this is a name that and you've heard of and you probably trust. And, shotguns are very big in the home protection market. So if you're not a hunter and you say, well, I want a shotgun because, if it's in the middle of the night and I don't know what I'm aiming at, and now all of a sudden Smith and Wesson is making shotguns this year. You might buy a Smith and Wesson. You might buy one of the other ones if they're cheaper, but like I said, this brand recognition helps you charge more and has a lot more potential. So basically, that's what I think he sees. I didn't do anything with the discounted cash flow model or anything like that. I think if you need a calculator and an Excel spreadsheet to figure out if something's a good deal, it's probably not a good deal. It should be a lot of optionality and things that are jumping out at you. And I have this. It was a big position for me when it was a multi-bagger. Now it's a small position, but as it keeps going down, I'm buying a little more. And once I sell some other things, I may add to this, but I'm fully deployed now and a bunch of other things. But I thought I'd give this analysis of what I think Norbert Lou sees in Smith and Wesson and what I've seen before and what I see now. And again, this isn't a recommendation to buy or recommendation to sell. You should make your own decisions based on your risk tolerance and your financial position and how much you're willing to lose. And you should do the work yourself, listen to the conference call, read the 10Ks, the 10Qs. And, if you like what you see, go ahead. And if you don't like what you see, don't. I see levers that can make it go up, but there's things that can also make it go down. And the risk factors in the 10K and the management discussion analysis, they talked about, potential for litigation. This company, if it was a small company that was loaded up with debt, might not be a big target for a lawsuit, but a company that has no debt and $120 million on the balance sheet, some mass shooting and a lawyer's going to see that $120 million, and they don't care that that's for your new factory. They want that money for their client. And they did identify that besides the risk factor of lawsuits, they do have insurance. But the fact that these lawsuits exist could make insurance unavailable or unaffordable. And they specifically cited this one shooting where the jury awarded, I believe against Remington, $72 million. And if one lawsuit can cost you $72 million and your entire market cap is $485 million, it won't take more than a few of those to put you under. And if that happens, it's a very real possibility. And who knows, maybe a politician will come in and save it, maybe because we need American gun manufacturers to supply the army. The government will do something, but you can't rely on the kindness of strangers. This is a risky industry, and like cigarettes, like OxyContin, like asbestos, there's always that risk of a lawsuit taking out your investment. So even though I'm probably more comfortable with the risk than you might be, I still would make this a huge position in my portfolio because of my level of risk tolerance. And whether you like this or not, you should do the homework and gauge your level of risk tolerance versus any investment you make. And again, I'm not telling you to buy this. I'm not telling you to sell this. I'm telling you to do your own homework. And there's other videos out there analyzing this with more precision, where they will tell you down to the penny what they think this is worth. And I think they've been wrong so far. And I think with some of these companies, you need to take a step back and unless it's a screaming buy or you understand it like the back of your hand, it should just go in your too hard pile and move on to the next company, or just buy the index. Warren Buffett, when he dies, which hopefully won't be for a long time, the instructions he left to handle his money that he's leaving for his wife is to put 90% of it in an S&P and 500 index fund, low cost like Vanguard, and then the other 10%, which you would need for day-to-day expenses, just put that in a short-term bond fund. So that's advice that he gave to handle the money for his wife, who was not a financial person, but somebody he cares for very much. And I care for you all very much. So, as I said, if you're not willing to do the work and you're not interested in investing in individual stocks, it's much easier to just buy the index and just do that. But if you are interested in analyzing stocks and whatever, as I said, you've got to do the work. Nobody can do your push-ups for you. So read the 10Ks, listen to the conference calls. If there's a slide deck that they use at investor conferences, go through that. Check the numbers, check their competitors. Do they have higher gross margin than their competitors or lower gross margins? And why is that? Are their costs in line with their competitors? Are they have more debt than their competitors? Is there anything that can take them out? So, just invert the problem, as Buffett likes to say. Start with the catastrophic risk. Catastrophic risk. If there's something that would make your investment go to zero, then maybe you should just not say, well, that's a small risk. Maybe you should say that's a small risk, but it's a risk I'm not willing to take, and move on to the next thing. So again, a lot of investing is, staying within your circle of confidence and competence, and matching that up with your level of risk, your risk tolerance, and position sizing. And you do enough of that, and you'll have a recipe for what works for you. And what works for me might not necessarily be what works for you, but we'll go through a few more of these because I have time, and I'd like to keep a record of the things that I invested in, and why I do it, so that I can look back on it later and see if I was right or I was wrong. Sometimes you're right for the wrong reason, and I don't count that as a win. And sometimes you did everything right, but something else happened, and then you lost money. So I think it's important to keep track of things like that. And normally what I do is I go to Value Line, which is a company that's recommended by Buffett, and they have sort of one page for each stock with a bunch of financial data going back several years. And I usually print that off, and the one pagers. And after I read the 10K and listen to the conference calls and look through the investor presentations, I come up with a number that I would pay for it. And then I write on the back, just a few sentences about, what I think is going to happen and why. And then it's good to do that. And I can look back on that later and see if I was right or wrong, and where I went wrong. And, if I was right for the wrong reason, what did I overlook? And I think it's also important to prevent thesis drift, because a lot of times, you already own something and your thesis isn't working out, but then you say, well, there's this other thing going on. So, maybe I should just hang on. And that happened to me when I had this the first time. Like, it was a multi-bagger, and then I sold too late. I still made money on it, but it dropped considerably after they didn't get the $800 million Army contract. And there was some other stuff going on, like with the expanding into hunting and fishing and stuff. And when I looked at my original analysis, I said, hold on to this for the military contract because it could double. The military contract didn't happen. Had nothing in there about, getting into hunting knives and fishing poles and things like that. And so that was a check on me, like, hey, am I falling victim to thesis drift because I don't want to be wrong? Or is this something legitimate? And that's when I sold. And eventually it just sort of stagnated for a while. And I think recently it got down to a few years ago as low as $4 a share. Let me see, back in 2012. So 21 got down to $6. $5.44. In 2019, it got down to $5 a share. It's up from there, obviously, but from $5, it had gone up to 34, and as a result of the spike in 2020 and 21. So from 34 down to 8, and it's up a little now, but as I said, it's not a quarter to quarter thing where you're going to watch it and then something's going to happen. I think this is the growth in rifle sales and shotgun sales. That's going to happen. They're going to fight for market share, but it's going to happen over time. And the marketing of the brand, that could happen. And these are things that take time. So, if you're buying this because you think it's going to have a pop on the next earnings call, I can't help you. I'm not good at that stuff. But, and I can't reiterate enough, do your own work, do the research. And if not, just invest in an index fund, because, this is not me recommending stuff. This is just me keeping a running tally of what I'm doing to keep myself honest. So anyway, I plan to do a few more of these on things that I like and things that I looked at and rejected. The reasons why I rejected them, or the reasons why I think I'll do okay on them, and then see if I'm right, because I think this will help me be a better investor even when I'm wrong. And it could be that I'm wrong on this. So don't buy this because I bought it. My record is nothing compared to somebody like Buffett. So if you want to copy somebody, copy Buffett, copy Monish Pabrai, go copy Lou. You never heard of me, and you probably never will. So this is me learning about investing and not giving you advice. So definitely don't follow me, because how do you know I know what I'm doing? You don't. So do your own work. And once again, just like and subscribe so you'll see further updates, and hope to see you guys soon. Thank you.